Alrighty, before we get into this, let me say a few words, okay? What you're watching is a video put together by a man who's been tore up in the market over the past several months. But what you're watching in front of you right now is a man who is so far on top of the YouTube game right now, I can't even explain it. There's no one touching these sorts of concepts, ideas, constructs, and putting together videos like this. A lot of folks are obviously covering the market and the news, and that's cool, and you know, financials and those sorts of things. But this sort of video, you got to be on another freaking level to do something like this and put something like this together and piece all this stuff together so folks can understand the real power in executing and buying real companies with real revenue growth, with real exciting opportunities, and understanding the concept of not getting scared out of the market and staying with your conviction, essentially, okay? And so I just had to give myself a little flowers there. I think this is probably the peak year for me in terms of YouTube. I don't know if there will ever be a year where I'm this on top of the game or I care this much about, kind of what's going on here, essentially, okay? So here we are in this moment. We have a man named Bob. Now, this is 1999. And Bob hears about how all these people are making money in tech stocks. So Bob's like, I don't know that much about stocks, but, I got a little business and, I'm hearing everybody's making money in tech stocks. I think I'm going to start getting into these tech stocks, right? And so Bob goes ahead and he starts looking at companies, right? And one of the biggest companies at that time is this company, Amazon.com. And he says, okay, I want to look at Amazon. There's all these other companies that are being valued on eyeballs and like they might have revenue someday, but we don't even know. He's like, if I'm going to buy a company, I want to buy a company that actually has real revenues, not just a story, but like actual real revenues and actual real strong revenue growth, right? And so he comes across Amazon and he's looking in this company. He reads their 1998 report, essentially, right? And he sees this company grew their revenue from $148 million in 1997 to $610 million in 1998, essentially, right? A 313% increase. He sees their customers are growing great from 1.5 mil to 6.2 mil. And he's looking at this company. He's like, this is freaking amazing. I love this company. And so Bob starts to get FOMO massively. And he's like, you know what? This company's growing so fast. This company's going to make me rich. I'm going to go ahead. And Bob makes an extremely dumb, questionable decision. And Bob goes all in Amazon stock at the peak of its value in 1999. In November 1999, he puts entire net worth in the stock. Horrible decision. Anybody that knows anything about stock market or just finances in general you don't go all in a stock. Horrible decision, right? So Bob puts his $10,000 in. He gets his shares at, around $83 a piece, and he gets 120 shares. And now he has no money, essentially. Now he makes an extra like $125 a week, roughly. So he has like $500 a month. And the next thing you know, Bob's Amazon stock starts going down. And next thing you know, in December, it's lower. So he's like, okay, let me buy a little more shares. So I got an extra $500 a month, to put towards stock. So I'm going to put $500. I got about it at 76, right? And he buys another 6.5 shares there, right? Now, all of a sudden, next thing you know, Bob's stock goes down more. And Bob's like, oh my gosh, I might have really screwed up. I don't know anything about value in stocks. I don't even really mess with stocks. I put my entire net worth in the stock. What is going on here? So Bob's faced with a very, very difficult decision. Bob is in a situation here where he sees a stock price declining. He sees an entire net worth declining. And he says, dang, man, what's going on with this Amazon company? I'm either going to sell out of this company, I'm going to hold it, or I'm going to buy more shares. And so next thing you know, the next annual report comes out now that the year is closed out, right? And he sees a recap. He sees that Amazon sales grew from $610 million in 1998 to $1.64 billion. Now, the increase of growth rate slowed substantially from a 300+% growth rate to 169%. And Wall Street might be freaking out about that. He's not really scared. He, at the end of the day, sees they're adding massive amounts of new customers. They're not making money. They're losing money on the bottom line. But at the end of the day, he sees this revenue beasting. He sees them adding a ton more customers. He understands that this industry of e-commerce, this concept and idea that's being played out here, is going to be a huge thing and much, much bigger in the future. And he's like, this company's already doing $1.64 billion of revenue. Imagine what they'll be doing in 10 years from now, 20 years from now. And so he says, you know what? I'm not selling out of this stock. Screw it. I know everybody's laughing at me right now. I'm losing money on this. But you know what? I'm going to buy this stock and I'm going to buy the dip and I'm going to continue to buy the dip over the next, many, many months. Okay. And so next thing he knows, he buys these 3 dips on all these 3 months here, $1,500 worth, right? $500 times, 3, right? $1,500. He gets at an average price of 67. So he adds another 22.4 shares of ownership. He adds another $500 here in this month when it's at $54, 9.3. Another $500 here at $48, right? That's another 10.4 shares. Here, there's 4 different months there, and he gets those shares at an average price of $37. That's $2,000, right? 500 times 4 is 54 more shares of ownership for him. He buys here another $500 worth. He adds another 17.2 shares. Here, as the stock continues to get devastated, and he's just, getting decimated, and everybody's laughing at him like, Bob, you are the worst investor ever, Bob. Like, what did you do? You put your entire net worth at peak, and you keep buying the stock that just continues to go down. Like, what are you thinking? But as the months tick on, he sees the numbers coming out and the growth is amazing and everything's amazing. And he's looking at the business fundamentals. He's like, the stock price keeps going down, but the business is amazing. So he buys more shares, another 21.7 shares there. Then, the stock just continues to get devastated. Over this 17-month span, he puts $500 each month, which is $8,500 over the course of that month. He buys at an average price at $10 because stock is above $10 sometimes. It's way below $10 sometimes. Gets another 850 shares. Now, Bob has less than $25,000 of his own money invested in this stock over a 30-month span, right? He now owns 1,112 shares of this Amazon company, right? And Bob decides that after that 30-month span, he says, you know what? I'm going to hold these shares. I'm going to watch the company's progress over the coming years, but I'm never going to buy another share of Amazon for the rest of my life. He says that. And he sticks with that. And he sees the progress over the coming years, and the progress is amazing. And the company continues to grow and grow and grow. Now, he decides to never buy any more shares. He just holds his 1,112 shares of ownership over the coming years, right? Now, Bob, he made some very, very questionable decisions. He goes all in, and when the tech bubble was at peak FOMO, November 1999, right? All in, like silly. And he also makes a questionable decision to never buy another Amazon share after essentially, 2002. And so he makes some very, very questionable decisions, but that's Bob, and Bob is what he is, right? But what's Bob's 1,112 shares worth today, right? Well, Bob's 1,112 shares are now valued at $2,910 a piece. And those shares are now worth $3.235 million, all from investing less than $25,000. And he put his entire net worth at the worst price possible in 1999, the worst price possible. And he never bought any more shares, which if he had just kept buying Amazon stock in 2003, in 2004, in 2005, in 2006, 7, 8, 9, 10, if he would have just kept buying, Bob would have had tens of millions of dollars in his account, probably more than that. But at the end of the day, Bob is still looking pretty because you know what? He kept investing in other stocks and other companies that were growing over the coming years in 03 and 04, and he just kept buying the dip, and he took advantage of those deals right out there, right? And this story with Bob, this is a story that is going to be true in this crash we're going through right now, where there are certain companies with real revenues that are going to that have 10, 20 years plus of growth in front of them, that are going to grow into giant corporations that are going to keep the pedal to the metal and continue to innovate, right? And there'll be some of these companies that will never come back to their previous values that they were valued at the peak of the market in 2021, right? In January, February, because some of those companies were just, like pie in the sky, opportunities that were just like impossible business models to pull off, and they weren't doing real revenues, and people were investing in those companies when they weren't even doing real revenues, right? And then there'll be other ones that are doing real revenues. Real revenues in the stock market are minimum $100 million, but usually, at least a few $100 million. And those companies that continue to grow and innovate are going to be the next giants of the stock market, right? Now, This, I think, this is so interesting for a couple of reasons here. What I'm showing you here is a 1998 shareholder letter from Jeff Bezos. It says, I'm incredibly proud of everyone at Amazon.com for their tireless efforts to deliver what has become the standard setting Amazon.com class customer experience while simultaneously handling such extraordinary growth rates. If any of you shareholders would like to thank this incredible worldwide team of Amazonians, please feel free to send us an email at jeff@amazon.com. Stuff like that, that just wows me. Like, I'm sure if I was around in 99, I would have been jacked up about that and probably doing videos about that, because it's just beautiful. It's just a beautiful touch, right? In 1999, we continue to benefit from a business model that is inherently capital efficient. We don't need to build physical stores or stock those stores with inventory. And our centralized distribution model has allowed us to build a business with over $2 billion in annualized sales, but requiring just $220 million in inventory. This is amazing, okay? Wait, this isn't even the most amazing part, okay? I'm just getting jacked up. I just got to talk about this for a moment, okay? Amazon stock fell over 90%, over 90% peak to trough, over 90%. It's ridiculous, okay? Over 90% this company fell. That's how irrational the stock market can get. This incredible company with this visionary CEO leading this company that's growing at these insane growth rates with this insane amount of new customers with an industry that was just going to get massively bigger over the coming decades fell 90% peak to trough. That is how ridiculous the stock market can be in given times, right? And there are stocks right now in this market that are down 50, 60, 70, 80, 90%. And some of those stocks will never come back because they never had it in the first place. They don't have the type of management team to get them out of that, right? And there will be certain other companies that will become the giants of industries and make their businesses 10x and 20x and 50x and 100x. But a company like this that had this incredible CEO and this incredible growth rates fell 90% in the tech bubble days, right? How insane is that? That's how massive the market can misvalue companies in the short term, right? Look at this here. Look at this. This is mind-blowing, right? What do you own? This says Jeff Bezos. At a recent event at Stanford University campus, a young woman came to the microphone and asked me a great question. She said, I have 100 shares of Amazon.com. What do I own? And he explains essentially what she owned. She owned a piece of the leading e-commerce company and went into detail on that, right? Now, that woman bought 100 shares probably right around the peak FOMO cycle of the tech bubble, right? And she probably got caught up into it because everybody was doing it at that time. And it was like, oh, tech stocks for the win. We're going to make so much money. And she probably bought her shares at some point in 1999. And she probably was going down and down and down on those shares. And she's like, what do I do, right? And I got to think to myself, I wonder what she did. I wonder if she sold those 100 shares. I wonder if she held those 100 shares. Or I wonder if she bought the dip. I really do. I think about that, and I wish we could find out whatever happened to that lady and whatever happened, that young woman, as Jeff Bezos put it. Wonder whatever happened to her. And rumor is she became Kathy Wood. No, I'm just kidding. But I know, in all seriousness, I wonder what happened to her, and I wonder what she did, right? Because those were the three scenarios, because she ended up getting destroyed on Amazon stock, right? And I just wonder if she sold out on that massive downfall over that 2-year span, or if she held through strong during that time frame, right? Or if she actually bought the dip. Because if she bought the dip, my gosh, did she make a lot of money. If she held, my gosh, did she make a lot of money. But if she sold, she probably still is thinking about the time she sold Amazon rather than buy the stock on that massive crash. She's like, I sold 100 Amazon shares, and that would be worth hundreds of thousands of dollars today, right? 100 shares of Amazon, almost 300K or some crazy number. Gosh, man, that's the type of stuff I think about. I'm like, whatever happened to her, and I wonder what she did. Now, if conventional wisdom tells us what she did, she more than likely sold, right? You don't get Amazon stock to have fallen 90% in that crash without massive amounts of people just dumping their shares left and right. And it's sad to think about because there's probably a 90% probability that she cashed her 100 shares of Amazon during that, right? Rather than buy another 100 shares and another 100 shares and another 100 shares and another 100 shares, she more than likely sold her 100 shares. probably at a big loss. And isn't that a crying shame? Isn't that a shame? And that's more than likely what happened, right? When she should have just been buying the dip. I love this here. Jeff Bezos puts in that shareholder letter, it's all about the long term. In 1997 letter to shareholders, our first, we detailed our long investment approach because we continue to add many new shareholders, certainly during that time, right? We made this letter immediately after this year. I invite you to please read this section entitled, It's All About the Long Term, as it's the best way I know to help make sure we're the kind of company you want to be invested in. As we wrote there, we don't claim it's the right philosophy, we just claim it's ours, right? And obviously, that's always the right philosophy when running a business, right? By the way, get some free stocks from Moomoo while they still got that exclusive deal. Check out pinned comment. Make sure to subscribe to the channel, okay? Running a business for the long term is always the best decision. And what we can learn from this, and the thing with Amazon is the same exact thing could be applied for so many of the massive tech companies that had huge growth during that time, and not just huge growth, but, if we think about the companies that, really had it when it comes to their management teams, their philosophies, right? I think that's the most important thing. A lot of people during the tech bubble lost a fortune. And the reason they lost a fortune is because they got caught up into not really revenue growth and not really like who's doing substantial revenues, but they got caught up into a lot of these companies that were doing minuscule revenues and a lot of companies that were basically valued by hundreds of millions of dollars or billions of dollars based upon how many people were clicking on a website, right? How many people were clicking on a website? Like that's just a ridiculous thing, but that's how they were valuing companies at that time, right? When all along they should have been looking at the companies that had meaningful revenues, 100 mil plus a year in revenue, had incredible growth rates, and had these sorts of opportunities over 5, 10, 15-year span, right? And the same could be said for not just Microsoft, but it could have been said for Apple, and it could have been said for Oracle and Microsoft, and a ton of those companies that, were high flyers during that day. Even if you were buying at peak FOMO in 1999, as long as you were also buying the dip in 2000, in 2001, in 2003, in 2002, and as these companies obviously continue to grow, their business is much bigger, you made a lot of money, right? And there were a lot of other companies that ended up getting acquired for premium prices by some of the big companies. But at the end of the day, a lot of it's going to come down to picking the right companies and being in the right growth companies over the future, right? And so that's why in this last, essentially, right, that we had the closest thing to tech bubble was January 2021. And in that time period, there's a lot of folks that were getting into some really questionable business models, right? That didn't really have meaningful revenues. And, it was like maybe someday we're going to have meaningful revenues. And a lot of people got caught up into those, right? Now, all these stocks have fallen. The ones that have meaningful revenues, doing 9 figures plus of revenue with great future growth prospects and great management teams leading these companies, those ones have fallen, as well as those ones that are just, were the meme stocks or the hope that maybe someday they could do something big, right? They all got killed, just like Amazon got killed, along with all the other great tech companies at that time that had extraordinary growth rates, extraordinary management teams, and were doing big numbers, right? Amazon got pulled down with all the other, let's call it trash ones, right? And it's the same exact thing that's played out recently, where you're looking at massive lists of stocks down 60 to 90%. And some of these business models truly have it. Like they're doing 9 figures plus of revenue, and they've got, a decade plus of growth in front of them with real management teams that are going to lead these companies to become much bigger corporations in the future, right? But in this market, when it pushes all these stocks down, it pushes all of them down to the abyss. Just like Amazon and every other big tech stock got pushed to the abyss during that time, right? And with these sorts of companies, with these sorts of opportunities and these management teams in front of it, you can't do anything other than buy and buy and buy the dip. And I know it's hard when everything's going down and, you got everybody laughing at you, but it's the right decision. And it's the one that when you look out 5 years from now, 10 years from now, it's the one you'll be patting yourself on the back and telling yourself, thank you for doing that. And, you could either be the Bob that bought the dip or you could be the Bob that sold off, right? Bob that sold off, he didn't end up doing anything. Bob that didn't sell off got stupid rich. That's what we do know. So anyways, guys, hope you enjoyed this. As always, much love and have a great day.